And right now, folks, as we do every Tuesday, Thursday at 3:30, we're going to jump over to our man Tim Ord. You can reach Tim every trading day at his website, ord-oracle.com. And don't forget, right at TFNN.com, under the Services tab, he's got 2 great webinars. 6 secret ratios every trader should know, and some of the ratios Tim's going to talk about. He talks about that SPY, VIX, and SPX VIX. We'll talk about some of that and the secret science of market tops. Both of those available under the Services tab at TFNN. Tim Ord, good afternoon.
We can see our charts.
Let me make sure we got them, and they're coming up right now, Tim, but I have them as well. So I think they are, but I'm not sure they're up there just yet. My producer can let me know. But I have them as well always. So we can start if you'd like.
Yeah, okay.
And he's got them up there, so go for it. I see him. Go for it, please. Perfect.
All right. So anyhow, this first chart is the daily SPY. We go back to, looks like about November of 2024. So it's just a gigantic pattern here. But I wanted to show that the bottom window is the SPX VIX ratio. And going into that high of February, the S&Ps were making higher highs. If you notice, the SPX VIX ratio is making lower highs. Then starting in May, actually started in April, but in May to where we are right now, the SPY was making higher highs, and the SPY VIX ratio was making higher highs, and the SPY was making higher highs from May until actually July. But last year, the SPYs or December to February, that period anyhow, the SPY was making higher highs and the SPX VIX ratio was making a lower highs. So anyhow, what I want to point out, what we got going on right now is everything's bullish here. If the SPY is making higher highs and that SPX VIX ratio was making lower highs, we'd have a bearish divergence. That's not happening. That's the reason why I toned this area in green, and I toned this area here in pink. So that's kind of shows you the difference. But let's look at the weekly charts. We're kind of going to go fast through the S&Ps because we actually broke out. There's not a lot to talk about other than the trends up. So we'll look at the weekly and the monthly SPY. If I want to get over the gold charts, I have quite a few different gold charts, and I want to show you what's really going on the bigger picture. So we'll kind of go quick here.
All right.
This is the SPY weeklies. We closed at a new high above the February high. This is a weekly time frame. Volume came in on the or last week as we broke above the previous highs of February. We did so on 245 million shares. The previous high was 170 million shares. You need to break a high on at least equal volume, preferably higher. And here we have obviously a lot higher volume. So that's a valid breakout. So if you break out to the upside, then support comes into the previous high. The previous high is actually closer to 608. I put 607 there. This is on the SPY. But anyhow, in that vicinity, it may rally up, come back down to it, and we think that's probably a good idea, or that's probably going to happen between now and September, probably, because we'll rally up here. The rally's still going strong, so I don't think we've seen a high of any consequence right now, but that may develop later in July. We'll have to see. But now we have support at 608 area, give or take. But let's look at the monthlies real quick. Monthlies kind of same thing. We talked about the railroad track thing. There was a big down day back in that was March of this year, made a bottom in April. Then he had a big upswing in May. The price pattern was about the same. This one's price pattern down, was about equal to the price pattern up. The volume was basically also equal. Kind of a parallel thing, straight down, straight back up on equal volume, about basically equal price. That's called the railroad tracks. And those come at reversals, and that's what happened off that low. And now we broke above the February high on the monthly time frames. Volume came in June of this year, 127 billion shares. Back in February, it was 3 billion. So we broke above and closed above the previous high. So now the previous high becomes support, which is on the monthly, it looks like about 610 area, give or take. This is on the SPY. So trends up, supports around 610, give or take. Uptrends intact, breakout confirmed on the weekly and monthly. So nothing really to talk about other than we're going to go higher.
We're rocking and rolling, right? Totally, man.
Yeah, we're
totally.
rocking and rolling. We got everything.
We are. This market. Totally, man.
Right. So yeah, we confirmed on the weekly and monthly. So this is not like a short-term high. There'll be some short-term highs here, but we probably won't see much below 610 the rest of the year. I'll put it that way. So that's that. Let's get to the gold issues.
Let's do it.
This is the XAU updated today. You get the RSI up around 70, above 70. Usually you're at a high. This chart goes back to a long ways. Let me get a drawing tool here. But this chart goes...
Yeah, 88.
1988. For some reason, it's not drawing. Oh, well... Yeah, it goes back to 1988. So every time here you kind of consolidated and went down, went up. But anyhow, they all marked basically not significant highs. I think the worst case scenario for us, we broke above a head and shoulders bottom. I think support's going to be around 5. This is on the XAU monthly, around 575. That's probably going to take a little while to get there. It's not going to be like next week or anything. It's probably going to be September, October. Could be later, but it's going to take its time going down. But this is the XAU and actually GDX. Let's go to the next chart, GDX. These are big charts, or these are the XAU, GDX. Those stocks and those indexes are big. They're not the little ones. Yeah. And that's what I want to talk about today. Here's GDX. We tested the high here of 1st of June, 2nd of June, tested that high. You can see the volume really dropped down compared to the first week in June. And now you broke below the previous low of this low. And if you notice, the volume increased, not a lot, but it doesn't have to. It just has to be equal or greater. And it did that. So it's trying to rally right now. That rally's not going to go anywhere. But we're probably going to go back down at minimum to here, which is around 45 on GDX. And I don't think that we're actually going to go out here to the music. So
no, hang right there, Tim, if you can. All right, and folks, we're going to come back. We're going to talk some gold. I know Tim, he's got some equities in there as well with some of his charts. We'll be right back with Tim, and we're going to talk some gold. Stay tuned, folks. Welcome back, folks. S&P's right now, right near where we're talking about negative by 1 point on the futures. 62.52, NASDAQ 100 in the red, Dow plowing higher, and the Russell up by about 1% as well. We're talking to our man Tim Ord. Don't forget, folks, you can reach Tim at his website, ord-oracle.com, and a couple of great webinars under the services tab at TFNN, and we're talking a little bit of gold right now. All right, Tim, go for it. I see your GDX still up there, please.
All right, GDX, this is the weekly chart. In general, we're at least going to go to 45. I think we're probably going to go to 40. Time frames kind of, I don't really have a time frame right now, but this is just a pullback at an uptrend, so it's not something to fret about, but the big ones are going to pull back, and this is one of the big ones. This is AEM. That's the symbol anyhow.
Yes.
This is a monthly chart. This chart goes back to actually 2006, and if you notice, it's a gigantic breakout. I mean, we broke out. This chart went sideways, starting basically 2008 all the way into 2024, and finally just broke out. Actually started to break out in late 2024. We're up around 118 when I made this chart, but this chart is due for a rest, and I'll show you why. This is one of the charts. I think it's both in GDX and XAU. I'm not for sure, but it's one of the big ones. They had the big run up, and this is one of the reasons why GDX and XAU is probably going to consolidate. And here's the monthly chart again, but it looks at the smaller time frame. When you get about 80% above the upper Bollinger Band. Inter month this did, so you can see kind of it didn't close there, but it got above there. It got up to 125. And he gets that far away above the upper Bollinger Band, the market's really extended. And you usually get pullback of some sort, which it did, and then goes back up and retests that high. And there you did. If you notice, the volume really dropped off. So you had a test of a previous high. So this shows, like XAU and GDX, is going to throw into consolidation. How big the pullback is? Well, basically support comes in probably around, looks like about 80 something, 85, 90 range. We may pull back there, we may not. I don't know how this consolidation is going to go, but it's going to consolidate for several weeks, if not longer. So that's one of the big stocks that I wanted to show. What's the next chart here? Okay, there's quite a few different stocks like AEM and GDX. All they're going to consolidate. So the generals are off the bottom. So what's starting to perform now? It's the juniors. Here's one stock that I actually talked about your show probably a couple of months ago, don't know. But this is the pattern that you should look at, I think, coming off of a low. This is a monthly chart, and it has a Bollinger Band on it. And the monthly charts rule the weekly, rule the daily, or the monthly charts rule the weekly charts rule the daily, and all the way down. So if you get the monthly charts bullish, everything below it, time frame wise, is bullish. So you got to get this chart in bullish category, and you get to get in bullish category, you need it to close above the mid Bollinger Band with volume. So if you notice, I squared this out in volume. You can see what the volume is right here compared to the previous volume. It's huge. It came in, and that was buying pressure, but it didn't really turn bullish. I mean, the idea, you had a selling climax here, kind of ended the decline, but really, momentum's your friend, and you want to have momentum on your side. So the best way to do it is get the close above the mid Bollinger Band, and you want volume to be high, going above that mid Bollinger Band, which it was. So this is started of something. This started last October, or actually this month would be actually November. It really started. That's where the volume started to come in, and it's been volume wise huge coming in here. The month of June was mediocre, but you got volume coming in, and you got to close above mid Bollinger Band. That's all you need to have for this stock, and it's just in early stages. The monthly Bollinger Bands don't flip up and down. Once they start turning up, they turn up for a long time. They turn up for a long time. So this is a multi-month, if not a multi-year buy. How long it's going to last, don't know, but this is going to last for a while, especially with that much volume coming in. Let's look at another one. Here's another one that basically went sideways from basically 2022 or 2020 to 2025. And if you notice, I marked all the volume here. You know, you compare the volume. This is up volume, this kind of a blue area. Back in here, this is 2000, off the 2016 low. But the volume really came into the upside. So this is a sign of strength here. You had another sign of strength here, and we're having a sign of strength right now. And so you got the same thing. This is a monthly chart. This is MUX. Used to be a real high price stock. But if you notice, I kind of hand this in here, which is basically below this low. In other words, if you break below a previous low, for it to be bearish, you have to stay below that low. If you don't stay below that previous low, what the market usually does is take out the previous high. Well, the previous high is up in this area up here. And I think that's probably where we're going to go. We had a base that built the bottom for about 5 years, so it has a lot of cause for this market to keep going. And we're hitting I'm calling this a neckline right here. It's kind of a slanted down one, but we're hitting the neckline right now. To get through that neckline, you need a sign of strength. And if you can see, the volume's really jumping up here. We have one day, that was selling, or 1 month, we had a selling climax, and immediately started going back up, and volume's really a lot heavier compared to the previous volume days. You can see it's up, I don't know, 25% more. So we're heading towards that neckline right now, and probably it's going to keep going right through the neckline. So this one's has just started to turn up, even though it's going sideways since 2023. It's breaking out to the upside. So this one, even it's not a major. It's not a major. It's a low price issue. It's around 10. Well, it's $11. But this one's probably going to keep going. It's not going to consolidate. So I'm saying that the generals are going to consolidate. The soldiers, which I call this one, is starting to go. So even though the GDX and XAU may correct here, probably not this one. It's probably going to keep showing a strength. I don't know, probably for another couple of months or so. But ultimately, I think we head to 45. It's around 10. I got some more here, I think. Or is that it? All right.
I think that was it. But man, those, I appreciate you going through the equities, especially, and boy, some of those names, man. Rob McEwen, of course, Gold Corp, right? And that chart, though, man, I forgot, but boy, it is wild. And I was jumping through whether it was, Newmont, Barrick, all these equities, man, the run and then the past on these charts. And McEwen, I mean, my goodness, man, that equity, you have it up to 45, and it was even up to like 100 back in 2011, and then came down to that same low, made it back up to $45. Just remarkable volatility on some of these equities.
Yeah, we're back into 2000 time frame, I think.
If
these
folks,
months are turning up. So
go look at some of those longer term charts if you went around, because some of this volatility, it looks good while it's riding up, but a healthy pullback might be right what it needs. Tim, I appreciate the update as always, man, and we won't talk to you Thursday. Markets are closed, so we'll talk to you after the 4th. Have a great 4th of July as well.
right, thank you.
We'll be right back, folks.